With another reporting season just around the corner, there are some key considerations as you're planning for this 31 December half year and year end. As usual, your year-end planning process should include a review of the new standards and amendments that are effective for the first time this year end. If you're a superannuation entity with a 31 December year end, then the new standard on superannuation will be effective for you for the first time. More generally, entities with 31 December half year and year ends should consider the narrow scope amendments that have been made to standards that are effective for the first time. And the two that we would suggest you take a look at would be the changes to the additional disclosures that's required in your cash flow statement around the impacts of liabilities arising from financing activities. This new requirement could see you disclosing the effects of foreign exchange movements and changes in fair value measures. The other amendment you should pay particular attention to is the change to the income tax standard, determining on how to assess the recoverability of your deferred tax assets as it relates to unrealised losses. Another important consideration this 31 December year end is the extent of disclosures that you plan to make about the potential impacts of the new standard on revenue, financial instruments and leases. 1 January 2018 will be the effective date of the new revenue and financial instrument standard. This is one day after 31 December 2017. With this, your investors and regulators will be particularly interested in the disclosures that you make. So you do need to consider whether you are making quantitative disclosures about the potential impact. This is definitely ASIC's expectation. And I should mention the recent ATO guidance on the December 2015 tax law amendments dealing with the lodgement of general purpose financial statements. This new measure is effective 1 July 2016, and the ATO guidance does give us some transitional relief for the first year. However, companies are encouraged to take a look at their particular company structure to assess the potential impacts of this ATO guidance. We do expect that there will be some companies who will need to start preparing general purpose financial statements where they have previously not done so. Our webinar on 31 December reporting also looks at some hot topics dealing with recurring queries that we have been receiving from our clients, and also discusses the IFRIC agenda decision on interest and penalties. So I do suggest that you go to our website and view this webinar. So those are our tips for this 31 December reporting. Thank you for your time.